tell you, here's what's going on. You made me a ton of money. And I had to keep out the expletives there because when someone's made me as much money as you have, you do want to kind of pepper it with the authentic language. I did exactly what you told me. Now, I know you probably hear a lot of people say, you know what? I did what you told me. No, I went and called my CFO. All right. And I said, listen, I just talked to this guy, Pomp, and I want tomorrow, and I'm going to give you some numbers. I said, I hope I don't get in trouble. I said, I want $500,000 in this. And you can buy it over a couple of days, but I don't want any longer than that because this guy was the authentic deal. And I had studied it before. It wasn't like I just I didn't just fall off a turnip truck. But I said, this guy is compelling. I even used, and I don't know whether you have any affiliation or not, but the brokerage you suggested. And I mentioned the money because it's never happened to me before. I bought a lot of stocks in my life, but I want to thank you. The reason I called you, I said, can I please come on your show and thank you? Because it happened. It happened just as you said. It also happened much faster than you said. But I'm very grateful. And you know who else is grateful? My kids. So thank you very much.
Well, listen, as many people who watched our first episode together, I think noted, the most compelling piece of it was how open-minded you were and how intellectually curious you are. And I think that is something that people forget is important in the investing world. So I can yell and scream from the rooftop all I want, but it takes courage and conviction for you to do something about it. So
look, it comes from studying your work. And look, by the way, I mean, you can say, well, I'm sucking up. I'm not sucking up. I mean, I just have tremendous respect. A lot of what you said to me, I have since, of course, told others. And we're not, there are things that you would say. I mean, I always knew that there was a limited number of Bitcoin. I always knew that there should be protection, and I regard it as an asset class. But I have for years said that you should have gold. And I think that what I had going for me was the recognition that what you were saying is what I was really searching for with gold all along. But gold let me down. Gold is subject to too many vicissitudes. It's subject to mining issues. It's frankly subject to failing in many cases. Where
do you think that's what's going to happen? Do you think that people are going to drop gold and buy Bitcoin, or what do you think is going to happen now?
If they listen to me, they're going to drop half their gold. I've been saying 10% of gold since 1983, and now I say 5% of gold, 5% Bitcoin. And I did not say that before I talked with you. I had thoroughly researched it. I was skeptical. And the reason I was skeptical is frankly because I said, you know what? I've done okay with my gold. This is the old dog, new tricks thing that I run up against with the Wall Street bets people. Like they're constantly saying, oh, listen, you're an old baby boomer, you've forgotten. I think it has to do with how young your mind is. And I listened to you, a friend of mine, Kieran Goodwin, said, I heard you on Pomp. Pomp's the smartest guy. I said, you know what? Damn straight. And I think that what matters isn't how old you are. It's whether you're young enough in hearing someone who knows more than you. And you know what? A lot of what you have to do is accept the fact that someone knows more than you. Now, we did in school. It's very funny because you walk into a chemistry class and you knew there were guys who were geniuses in chemistry and you're going to get blown out. I walk into a Bitcoin class. What do I think? I'm going to know more than the Bitcoin guy? It's no different from a chemistry class, no different from an engineering class. I walked into the Pomp class. And when I got not schooled, but taught by Pomp, I said, what am I doing not protecting myself in what I have been saying to people could be hyperinflation? But even if there's just plain old inflation, why not get in? And I did the thing that I did. The only thing I was confused about was this notion, you got to help me here, currency versus asset class. Because I think that I'm conflicted and I'm conflating. You can help me say what it really is.
Yeah, so I think that there's three things people are using it for right now, right? So you have people who are using it as a medium of exchange, people are using it as store of value, and people who are using it as a speculative asset, right? And those three things serve different use cases for different people. But I think that a currency, obviously, medium of exchange is store of value. It's hard to deny that people are storing value. I think that's pretty well accepted, kind of the digital gold narrative. And then when you look at like on-chain transaction volume, right? And some days now it's, 10, 12, $15 billion in a single 24-hour period of this transaction volume. That's putting it into trillions of dollars on an annualized basis, which, Visa and some of these guys are, 8 to $12 trillion in annualized volume. So you're talking about maybe 25 to 50% of the largest card networks in the world. So people are using it. Now, what they're using it for is very hard to determine, but they're using it as some sort of medium of exchange. And then I think the third one, and probably the one that everyone focuses on, is the speculative nature, right? People are absolutely, in some cases, buying it because they think it's going to go up in US dollar terms and they're going to sell it at a profit later. And so I think that what we got to figure out here is what's the dominant use case? Are most people speculating, or are most people using it as store value, or are most people using it as medium of exchange? My guess is when you look at the data, 60% of Bitcoin hasn't moved in the last 12 months. So that tells me that the majority is being used as a store of value over everything else today. Now, what happens in the future, we'll find out, but that's how I kind of think about, from a use case perspective. And is it a currency? Is it an asset? Well, technically it could be both, right?
Right. Well, for me, because of my here's something that is old dog. I have always said to people, listen, if you could ever be in a situation where you can play with the house's money, you take out what you put in, then you're blessed and you never have to touch it. And that's what I've done. There were a lot of people who were mad when I took out the money I put in. But now I'm never going to touch it, Pomp. I'm not. And I may never, because you traced out a scenario. And for those of us if those of you who haven't watched it, you traced out a scenario that doesn't stop at 100,000. And a lot of people laughed. And I didn't. It was at 12,000. And I started thinking, I got to get in before it got to 50. And I went home and told my wife, I said, Lisa, I'm doing this thing. And she said, why? And I described her talk. And she goes, you sound mesmerized. I said, no, I sound educated. These are two different things. It's not being mesmerized. It was educated. And the course that you laid out made me think, you know what? It isn't just a currency. I bought it as currency, but I realized it was a store of value, and a better store of value than what I was using. And did I have the belief that it could go? I mean, I did believe that it could be speculative staying power. But more importantly, what I realized is I deal a lot with the company Square. And instead of saying that that I'm going to ride the speculation wave, I knew that this Cash App, kids are buying, they're buying, little bits of schnitzel, as I would call it. They're buying slivers of Bitcoin. And I said to myself, you know what? I want to be with them because they represent the future, but I also recognize they may be doing it for whatever reason. But I can be part of that wave too, and not feel that wave is thoughtless. It's not thoughtless speculation, not after the way that you laid it out. And I am sure that you can lay it out for just in 1 minute. You got to just lay it out again. I know that's a short capsule, probably not fair, but why? You know exactly what made me pull the trigger.
Yeah. I mean, look, it's very simple. There's a fixed supply asset. And if demand increases, the US dollar price value has to go up. And what we're seeing now is historically, there was tons of retail investors that were coming in with retail dollars. But now every single financial institution and corporation are asking the question, what is our Bitcoin strategy? And when they show up, Tesla shows up with $1.5 billion. Michael Saylor shows up with $1 billion. JP Morgan, Guggenheim, hundreds of millions of dollars. And so I think that naturally what you're going to just see is continued upward price movement to accommodate everyone because the existing holders don't want to sell. And so, again, 100K, I think, is a milestone on a much longer journey. Where it goes and on what time frame, who knows? But I think that it's pretty crazy that, just a couple of months ago it was 12K and now we're sitting here and it's, $55,000, $60,000, whatever it is. So, kudos to you. What questions do you have? Let's do questions you have.
Why did I suggested that corporate treasurers, which I at one time handled a $100 million fund for a corporation, that corporate treasurers should put a percentage of their corporate cash into Bitcoin. And I was laughed at universally. Should I have been?
No, of course not. And what you're going to find is most corporate treasurers, I think, pride themselves on the fact that they're not running a hedge fund, right? They don't want to look at themselves as speculative investors. But ultimately, what their job is, more than anything, is risk mitigation, right? So everyone thinks of Bitcoin and they look at the upside. Oh, how much could it go up in US dollar value? But actually, if you look at it the other way, right, and we could talk about some of the kind of inflation concerns that probably you and I both have, you start to say, wait a second, the dollar actually may be the riskier asset out of these two. If you look at your bond portfolio, there's not a lot of bonds you can hold right now that are going to really retain value in the same way. And so I just say to people, look, zoom all the way out, look at a 10-year track record, right? Bitcoin has grown in US dollar terms at a 200% compound annual growth rate. 200% a year for 10 years, right? 12 years, whatever it's been. And you can say all that you want in terms of, oh, that's because it started out really small and there was no exchanges or whatever, and it grew. Well, the compound annual growth rate over the last 10 years has been going up this year, right? It started out the year at like 196%, and now it's at like 205. And so naturally, like, you're just getting this upward movement. And so I think that ultimately what you're starting to see, whether it's MicroStrategy, Square, Tesla, et cetera, is absolutely the founders or the CEOs of these businesses happen to be individuals who are forward thinking, who are technology kind of minded. And they see that they're not going to go put 50%, but they're going to put a percentage, whether that's 1% up to, Tesla thinks got 7-8%. Michael Saylor from MicroStrategy is taking a very different approach. He's saying, listen, I'm going to get the market to give me free dollars, right, at 0% interest rates. And I'm going to take that as free dollars that are guaranteed to lose value over time. I'm going to convert it to this sound money, this digital sound money. And I think that what we're about to see, and again, I don't know exact timing, I don't know who kind of will break the dam even further, but I think we're about to see a lot of people do this. Why would you not take free money that you can then go convert to sound money and essentially watch it continue to appreciate? And so I think that what this is going to happen is this is going to go from, on Wall Street, what was a contrarian idea has now transitioned to a consensus idea. Everyone has a Bitcoin strategy or is trying to figure out what it is. In corporate America, with the treasurers, what you're about to see is we're probably on the precipice of the transition from contrarian idea to consensus idea. And when that happens, they're going to bring a lot of dollars with them, right? And so I think that you're just going to continue to see this super aggressive upwards price movement over some period of time. Maybe it's 3 months, 6 months, 9 months. Who knows what it is? I'm sure that there will be a blow off top at some point, kind of Q4 this year, Q1 next year, whatever. But the key at that point is going to be Bitcoin's not going to die. It's not going to go to zero, right? It's not a Ponzi scheme, a bubble in the sense that it's going to pop and go to zero. Instead, what you're going to see is you're going to see the consolidation again at some new floor of the value of the asset. And then we're going to go through it all over again, because in 2024, we got another halving, another supply shock coming. And so it's just this like crazy, beautifully designed asset that I think now you're starting to see Wall Street, you're starting to see corporations wake up to. And here's the crazy part that you'll understand that some other listeners may not, is Bitcoin's probably the only asset that as it goes up in price, it actually becomes more attractive to the corporations because now it's getting to be big enough where they can actually play in it. And that's a wild concept, right? Because most assets, it's the exact opposite.